campus. All right, I guess we're sharing now anyway. That's good.
I can see that.
Then I can pull this up and do this. I think we're ready to go. It's a great pleasure to introduce Dana Chavez. I met Dana several years ago. You were part of our first class, our business class, and at that time you were with the FFBF, which is the Florida Federal Banking.
First federal bank in Florida.
Florida. And at that time, Dana talked to us about how she was very instrumental in developing protocols for commercial banks to handle cannabis customers. Not just here in Florida, but across the United States, right? We're dealing with all kinds of different states and banks and stuff like that. So.
Right. I got my start in cannabis banking in Colorado in early 2014. When we knew that the recreational use had been approved and was scheduled to go live January 1st, 2015. So the credit union that I worked at, we put our nose to the grindstone, and with my relationships in Washington, D.C., we spoke to a lot of groups out there, Vinson, NCUA, and the like, to see, well, if cannabis is going to be legal in certain states, we need to get the cash off the streets. So what would a banking program look like? And, you know, they put out the Cole memo, which is pretty good guidance, but, you know, it's up to the banks to figure out the rest, right? The Cole memo only has like 8 points to it, right? So we actually ended up writing the book on banking cannabis, but it really doesn't give you any blueprint for anything. And through that time, I sat as the chairperson for the Banking Access Committee for the National Cannabis Industry Association. I developed online course content for the University of Northern California. I've advocated in Washington, D.C., and offered testimony in front of Congress on banking and lending for the industry, and to get the SBA to include cannabis and ancillary businesses in their lending program. So I was eventually recruited to come to Florida to run the cannabis banking program for First Federal Bank. So, and over the last 2 years, I've been working with a fintech company to build an all-inclusive, state-of-the-art compliance banking program to make it available for all of the banks, because the programs that are out there right now, they lack many features and functionality, and they don't take away any of the staffing requirements, financial requirements, the staffing requirements, and it's still very manual. So what's the point, right? Anyway, so that's what helps bring me here today. The evolution of banking and payments in the cannabis industry evolves regularly. I also sit on the committee and the board for the ASTM, and what the ASTM is the entity that creates industry standards worldwide. So I'm helping to create banking and payment industries, payment and banking standards for the cannabis industry, and what that's going to look like worldwide. So today we're going to talk about the legalization, the industry growth for both in Florida, the United States, banking the industry is always going to be an issue, trying to make it easier for them. Fintech innovation for banking and for payments. What are the current solutions for payments out there? What's legal, what's illegal, and why? So to get started, the legal landscape for marijuana is changing dynamically in all 50 states, and it creates confusion between state and federal laws. You know, federally illegal, legal in certain states, and what's legal where. So this map includes information on state legalization, whether it's medical use, recreational use, and psychoactive products from hemp. So what's a psychoactive product from hemp? Does anybody know? Delta 8, Delta 10, Delta 3. All the stuff that you can find at your local vape smoke shop. Why is it legal there? It's derived from hemp and it's under 3% potency. So anyway, as of January this year, we have 22 states that are fully legal, 22 states that are mixed in one way or another, either they're medical or they allow low-grade CBD, hemp, etc. And 6 states are still completely illegal. So in 2023, we should see about 13 states that have the possibility of expanding. Florida really isn't one yet, and I'll tell you why in a minute. So for Florida, currently there are 22 licenses. And out of those 22 licenses, I would say maybe 15 of those businesses have dispensaries. It takes a long time to get going. The state is awarding 22 new licenses here at the end of April. So, and recreational use will be on the ballot probably in 2024. So recreational use is hoping to be on the ballot. A company that's working with Trulieve or being backed by Trulieve called Safe and Smart Florida are working to get it on the ballot. And they've crossed their first hurdle and they've got about 295,000 signatures, which was needed for the Florida Supreme Court to review the ballot and the language on the bill that they want to propose. So once the court approves it and reviews it to make sure that it's a single subject item and it makes sense to the voters and doesn't mislead them, it should be on the ballot for 2024 for legality in 25. So if approved, they'll still need to we will still need to acquire about 891,000 signatures to get it fully on the ballot. So the sales data that you see on this screen comes from real-time sales reporting data by participating retailers via their point of sale system. So as you can see, this data in just in 6 months from January through July, sorry, I'm a little tongue-tied today. There was a little over $1.4 billion in sales. That's quite a bit that's just Florida in 6 months. So Florida is just behind the emerging market for Illinois and ahead of Colorado. And both of those states are recreational as well. So Florida is the largest medical cannabis market in the country. So across the 12-month period, Florida averaged about 147 million in sales. So the monthly growth rate for that is about 1% a month, right? That's pretty good considering everything else is exploding. So this growth rate reflects the overall stagnation of the broader U.S. market with the average national month-over-month growth rate of 0.03% since September of 21. Okay, so the growth for the U.S. market in general. The U.S. cannabis market is estimated to reach about over 31.8 billion in sales by the end of this year. So, and growing to roughly 51 million by 2028. So in 2022, 7 states began sales 6 of them began adult sales and 1 for medical. 4 states will started later in 2022, so that data could be a little skewed and be more for this year. So every year analysts predict that what the cannabis industry is worth, right? And so every year that number exceeds their expectations. And Wall Street projects the industry value will reach over 100 billion by 2030. That's quite a bit.
So Dana, do you have any sense as to, given that the valuation sales are going up exponentially, why cannabis stocks have tanked?
Cannabis stocks are tanking because there's a lot of mergers and acquisitions going on right now. You will see a lot of businesses, and the industry is still very young, considerably speaking, and we're learning lessons. Let's take MedMen, for example. They were huge out of California, right? They had a great business model. They were growing exponentially. Their senior executive team got greedy and flamboyant and spent money that they shouldn't have spent on things they shouldn't have spent. And they were less than transparent with their shareholders, and they didn't manage their growth well. So they're barely hanging on with what they have left. They've actually ended up selling off a lot of their licenses.
I say they had to sell their Florida dispensaries. They sold to a company called Sunburn.
Mm-hmm.
But they, ever since they got to Florida, I've had my card since 2018, and every single person I've talked to in the program, the MedMen had a bad name for themselves before they even opened their dispensaries in Florida. People already had like a preconceived notion about them.
They took too long to come to the market. Their business model just was not sustainable. And quite literally, a few of their executives are no longer even in the industry. So.
Can I ask George a question? Do they have a bad reputation because of the product they were selling, or just because of their
I
attitude?
really don't know. I think it was just the people who were behind the company. I just always heard, don't give your money to those scumbags. I heard it from multiple people.
Okay, so it was more of a personality thing.
Well, they weren't very good to their employees. There was a lot of friction at the top. It was a constant battle inward. They had a bad culture inside. So, it's never good. But we see the mergers and acquisitions. A lot of these mom and pops are going out of business. They thought they could run well, but the cost of compliance is very expensive. And if you really don't understand the industry, you really just are not going to survive. And that's when the big boys come in and swoop up and take over. And in Florida, the licensing and the way it's structured, the only way that you can really even enter the market in Florida right now is if you're a multi-state operator. So it's not fair by any means. So when recreational eventually becomes legal, the hope is that it will all change, and then you'll have more choices, you'll have more options in product, as far as edibles, drinks, whatever, you'll have a much wider selection to choose from. So while inflation has driven the cost of many household goods higher, the opposite appears to be happening in the cannabis space. So the retail sales tracking data shows that the average retail cannabis prices have fallen approximately 20% between third quarter of 21 and the third quarter of 22. So the decreases in the consumer demand compared to the surge during pandemic, and combined with the competitive pressure for producers and retailers, has caused a significant drop in the price. The more competition there is, let's take Colorado and California, for example. There is so much saturation in the market that the price per pound has literally went from $3,500 a pound down to less than $600 a pound. But the cost of doing business has never gone down, it's only gone up. So the profit margin that these businesses are making is much less. Okay. So it's anticipated that over 108,000 new cannabis jobs are predicted for 2023. Even though we still see in the paper all day, every day about all the layoffs. But if you look, it's all the larger corporate MSOs that are doing the layoffs. It's because they overhired. So the strongest job market when fully established will be New York, New Jersey, Maryland, Missouri, and Illinois. So, and that includes sectors like marketing, accounting, transportation, banking, etc. So that's all taken into account. So how many financial institutions are actually banking cannabis? Well, according to FinCEN, it's about 755. In reality, it's less than 250. So where does FinCEN get that 755 number? It's because banks have to file cash transaction reports of over $10,000 and SARs, which is a suspicious activity report. So when they're filing suspicious activity reports because they find out that the transaction was a cannabis-related transaction, they have to file a report. So it appears to FinCEN that that bank has a cannabis banking program, when in reality they don't. So, however, as the market expands, access to banking continues to lag. So so let's see, I'm sorry. So, we have the Safe Banking Act. Everybody puts their hat on the Safe Banking Act. They're going to hear that over and over and over again. Congress has approved marijuana banking reform more than a half a dozen times. And despite the lack of legislative progress, the playbook does still exist for banks to do business, to serve cannabis in a compliant manner with FinCEN. And that's the cool amendment. So nobody asks for permission, they just show them how they're going to do it and do it right. So as the industry expands, attitudes towards cannabis start to evolve. We've seen it already based in Florida. It's more of a business than a commodity. Financial institutions are facing new competition and the pressure on their business model. Okay, so larger banks are entering the market. Right now, it's always consisted of the small credit unions or the state chartered community banks. But now the larger banks are starting to get into it, the 10 to $55 billion banks that are federally chartered are starting to get into the industry as well. So the earlier entrants are using their expertise and their knowledge to get an edge on the newer banks entering the market. And they have to start increasing their product offerings. And what do I mean by that? Traditionally, cannabis banking only lets you take advantage of deposits, withdrawals, writing a check, and maybe using your debit card as a business to purchase other goods. That's not very, not very mature in the business sector. So, sorry, let's see. Competition is creating pressure on financial institutions to operate more efficiently. So they're leveraged fintechs. What is a fintech? So a fintech is a financial technology company, firms, like the firm that I work for, who improve banking operations for banks. So if you have an app on your phone for your banking, for deposit, or you can use Zelle or Venmo, Those are products created by a fintech. Okay, so a growing number of US banks are moving into cannabis banking despite the legal regulatory risks. When it comes to meeting compliance obligations, banks are employing strategies that achieve greater efficiency, that dramatically lessen the burden on both bankers and their customers. So what do I got here? Historically, banks price services strictly to offset or monetize their compliance function. When I left First Federal last November, we had over 30 dedicated compliance officers in the cannabis division. $70,000, $80,000 a job, a position. And that's a lot of money for a bank.
Is that because the cannabis business is still more cash-based, that it's harder to keep track?
Banks have to treat every cannabis dollar as though it's a cartel dollar. And so we have to track every penny of your deposit to verify that it's legal tender or that it was obtained legally and not from a black market or black market sales. So what happens is when you have that high of a staff burden financially, you have to offset it with higher fees. Go ahead.
What if you have like a cannabis growing, or like you have money coming from like federally illegal place for cannabis, but then it goes into like a shell company, like a legal fertilizer company, and then goes into a bank? Is that still legal?
I think you should, I didn't say that. So say that again. I'm
Like
sorry.
you have money coming from a federally illegal cannabis like co-op or cannabis store, so it's federally illegal since it's cannabis. But then what if they like were funneling the money to like a fertilizer company that was illegal? And then into it. Is that right?
It's not allowed. It's money laundering, and you kind of go to prison for it. The bank's job is to know every move that plant makes from the time it was a seed. So when you hear about seed to sale systems, before they can ever plant a seed, they have to tag it and number it. And that number sticks with that plant until it hits your house. So I know that a harvest that planted, that had 200 pounds of harvest, they sent 50 pounds to the manufacturer to distill for cartridges and then edibles and then flour. And then not from there, from those 3 places, it went to 12 different dispensaries. Well, from there, it went to you and you and you, and I know exactly what you bought, what day you bought it, and how much you paid for it. That's how I know. And compliance for this industry is never going to go away. Never going to go away.
It's unbelievable. I can't conceptualize how you can track that. Obviously, I'm saying, you can, but I can't.
Just yesterday in the news, there was an article about a company in Michigan that was infiltrating black market product into their product. So not only are they going to get fined and possibly go to prison, guess who else is going to get in trouble? Your banker. The banker should have done that. That's where fintech comes in. Fintech, we use AI, artificial intelligence. We want to minimize the burden of the time, not just for the bank, but for the customer as well. I had, oh, go ahead. Okay.
Well, so I had a question about, so do you know about CanPay? Do
Sarah?
you know about CanPay?
Mhm, yeah.
So how do they operate with everything that's going on? How is it legal that they're a placeholder without any interest or anything like that?
Because it's a closed loop system, okay? So you have to load something into your phone in order to use that. It's a closed loop system, and I'll get to payments here in a minute. What fintechs do for the banking industry, and forgive me, I'm gonna boast about my own firm. For the last 2 years, I have been working with a fintech to build a state-of-the-art end-to-end compliance banking system. So that means that from the first time that I received an inquiry from a customer about banking, I have all of that data. And so when I send in their application, I could see like a Domino's pizza tracker where they are. And they have the same portal on their side, so when they submit it, they can see where the compliance department is on their due diligence review. Okay, and so it's designed to minimize the time frame for due diligence. Due diligence can usually take 6 to 12 weeks before you ever get a bank account. In the meantime, you're accepting cash that the bank can't take because it's considered legacy cash. So it minimizes the due diligence, it automates the process. So the biggest problem is, what documents am I supposed to, what's an article of incorporation? What is an operating agreement? What do you need? I don't know what this is. So our AI feature will help you get the right document and then the first time, so it's not a consistent back and forth. After that, they do the onboarding and continued monitoring. So with this tool attached to the bank's core banking system, we are attached to their banking, their deposits, their withdrawals. So not only are we monitoring their cannabis license and all of their product and all of their sales, we're monitoring their deposit and withdrawal habits. And we're taking that information, and for data and analytics, we are using that to determine what kind of customer they really are. So it's basically a risk score. If they're consistently depositing $100,000 every other day, and then today they deposit $2 million, that's a trigger. Something's wrong there. Or if they have $100 million in the bank and they withdraw 90 million, that hurts the bank. That's a trigger, that's an alarm. What do we do? What are you doing with that money? Where are you going with it? Because it might be your money, but everybody still has to know what you're gonna do with it. So it automatically fills out SARs and CTRs. As you can imagine, with all of these deposits by all of these businesses every day, our bank was doing typically about 5,000 reports a month. Each report takes about an hour long to complete. That's a lot of manpower, it's a lot of time. So we figured out a way to automate those. So the compliance officer, all she needs to do is validate and approve and send it on to the Federal Reserve. So, and then it's a gateway to other products. Lending modules, it'll take the risk score and everything from their documentation. And if the bank offers lending, they click a button, the application is automatically populated, and the data from their bank deposits determine their risk score or their credit rating score or their credit worthiness for a loan. So the bank doesn't have to take 6 to 8 months to sit there and figure, well, is this guy gonna pay us back? Is he not gonna pay us back? We don't know.
So so you're saying the risk score is based on the lender or the customer's behavior, consistent behavior?
Yeah, each bank has their own set of algorithms that they would want to put in. No two banks lend exactly the same, so they have different appetites. And so we can plug that into the system, and those algorithms automatically populate based on the behavior of that customer. And so now when you get to payments, that's a tricky business. There's a lot of solutions out there. There's reloadable store cards, there's wallet pay. Wallet pays are good, they're closed loop systems, they're ACH, comes out of your check. But for the merchant, sometimes they don't get those funds for up to 10 days. So it's kind of slow. And they need that money, right? Cashless ATM. Does anybody know what a cashless ATM is?
So it's basically when you use your debit card at the dispensary, and then instead of it, they'll round up to, let's say you've got $153, they'll round up to $155 and give you $2 back. So basically, instead of it being through an actual bank, it's basically like using cash instead.
And so when you look at your bank statement, what does it typically say?
It'll be the rounded up numbers.
It'll say ATM withdrawal.
Yeah, ATM withdrawal.
When I use those though, I get charged $3.50 from that company and then another $5 from my bank. So it's not even worth it a lot of times.
Plus it's illegal.
Is it?
I don't know if you've heard about that, but Grow Healthy, if you've ever heard of them, they just had an issue with that. So now they don't do any cashless ATM withdrawals there. So you have to either bring your own cash or use their ATM to even make a purchase.
It's illegal because you don't have a paper trail to tell you what you got, or that's 170.
It's illegal because it's masking the true nature of the product that you just purchased.
Okay.
So if I'm at Grow Healthy and I just spent $153, my receipt and my bank statement should say Grow Healthy, $153, not ATM withdrawal for $155 or $160. And because they take a fee for it, that makes it even more illegal. So what other option is there? PIN-based debit. A lot of cashless ATMs masquerade as a PIN-based debit because you got to put your debit number, your PIN number, and making the purchase. The difference is, Visa came out a few years ago and said, we will not allow debit or credit card purchases for cannabis on our rails. Okay. They're the largest bank cards in the world, right? So every processor, every bank really relies very heavily on Visa and MasterCard and those rails to do business. But there's also Discover, there's MasterCard. How many processors are there in the US? Probably about 13 credit card processors. And when you go to an ATM and you see Star and Interlink and Pulse and you see all these names, those are all the networks that those rails for that withdrawal go through. So we have the ability, and we work with a processor, one of the larger processors in the US, and we use, for the Durbin-Dodd Act, they said that Visa MasterCard has to have at least 2 other lesser known credit rails, debit rails that people should be able to use. Well, we can't use credit, right? So we use debit. Visa rails are considered A rails. All the others are B, C, and D. So if you don't use that Visa rails, you should be fine. So we make sure that all of those transactions go on the B, C, and D rails. And those are rails by processors that will allow these transactions. Or don't ask them, tell. So, I mean, the industry is always going to morph. And it's really considered very much in its infancy right now. There's a lot to normalcy. And so what I always try to do during my career in this industry is try to normalize the fees and the business activities for this industry so that they don't get robbed or raked over the coals. Banks don't always take this into consideration when they do their fee structure. They have to make their money back, right? But when it goes federally legal, what happens? Everybody gets in the game. And then they go back to normal fees. These banks that are up here charging $10,000 just to apply for a bank account. You don't get that money back if you don't get the account. Oh, and then by the way, after you pay for the application and you get approved for the account, you have to pay fees of upwards of $5,000 to $25,000 a month. You have to pay so much percentage of each cash deposit. You have to pay your armored car carrier. All these things. Cash is very expensive. The cost of cash is about 9.1% to use cash.
In other words, if I make $100, I'm only netting 91 because of the fees and the.
Well, you gotta figure, you've got the time that it takes, your teller, or they gotta count the till, they gotta count the money back, they gotta close out the till, they have to do the deposit. Go ahead.
Do you think that's gonna lead to like a decline in cash is king, or
Say that again, I'm sorry.
like, do you think with cash costing so much, do you think that's gonna kind of change how it was, like cash is king?
So many things are changing the dynamics of using cash. We always hear that we'll eventually be a cashless society, which I hope not. But yet the cost of cash is very expensive. Cash really isn't king. And because these businesses operate mostly solely in cash, that doesn't make them wealthy by any means. Doesn't mean they have a stockpile of cash in the back room, and it doesn't mean that they're going to deposit hundreds of millions of dollars into your bank account. And that's the misnomer for banks. Banks want your money to stay in the bank because they use that to lend against other loans, right? So it's always in use. And so when that money isn't in the bank and it isn't staying in the bank, it throws the banker off. And the bank can't use those funds for anything, right? Because they need to offset their concentration risk. So for every $100 million a normal business puts into a bank, the bank has to in turn sell that much more in lending, credit cards or whatever, whether it's commercial loan, auto loan, home loan, credit card or what have you. That's how banks make their money. And they really rely on those big deposits to do that. So, are there any other questions? I know I went through this really fast. I thought it would take a little longer. You might get to go do that little workout now.
I find it interestingly complicated. So there's a lot of
There are a lot of fintechs that are actually starting to act as banks. And our firm will probably be headed that way within the next year and a half. Go ahead.
So I asked, like, are fintechs like in other industries, like not just marijuana, but they're doing like
answer
other?
anything?
Yeah, like other businesses. like-
Oh, yeah, it's anything to do with money, there's a fintech involved. Whether it's innovation, technology, the technology that banks have or businesses have that have anything to do with finance, a fintech created that technology.
What do you think the future of cannabis banking is going to look like?
It's gonna be the exact same as it is today. It will always be considered high risk, and it will always be compliant heavy. You know, take gambling, casinos, whether it's, and bars, because they all act, they're in cash. Pornography, that's all very high risk, and there are very few banks that will bank those industries. And believe it or not, chicken farms are high risk too.
Is it the CDs that wipe out the floor?
So, yeah, go ahead.
In the beginning, you said that you used to do this and now you do something different. What do you do?
I've been in banking, and now I work with a fintech, and I helped develop an end-to-end compliance platform to make it easier for smaller banks to get in and compete in the industry so that it doesn't cost them an arm and a leg. And, oh, by the way, you can't afford to do in-house compliance, we'll do it for you. Now you need payments, you need the revenue. Our job is to help these banks be more profitable. Our job is to make these businesses, the operators, be more profitable. Right now, they make, the average profit margin for a cannabis operator is less than 20%. What do you think it is for basically a 7-Eleven?
75.
Got that right? You paid attention in another class.
What was the number? I didn't hear it.
So 75%.
5%.
75% profit margin for a normal business. Why is it so low for a cannabis business? So since it's considered high risk, anybody and everybody that does business with a cannabis business has to use that element of compliance. Do you imagine? Everything you do, you have to provide the same materials. I just want to order milk for crying out loud. Stuff like that. The cost of compliance is expensive. And so what that does is that makes the fees more expensive, and they pass that on to the operator. So their fees, they're getting feed and taxed to death by the city, the county, the state, the local bus line, the local, you name it. You look at a receipt from, I haven't looked at a receipt from Florida, but if you look at a receipt from Colorado, you pay just as much in taxes as you just did for your product. So imagine what things will look like, and if it goes federally legal, everybody wants it to go federally legal, and I particularly don't want to. And the reason for that is because big pharma and tobacco are already basically in the industry, but because of the regulations and the restrictions, they can't do what they always do. And what do?
Big take on everything.
They put stuff in the product to give it an addictive quality. It's not the organic plant anymore. RJ Reynolds is already in the industry. They're a parent company of a parent company of a large MSO. So they've already been positioned to infiltrate the industry. And once they do, they take over a lot of the market. Because why? They're a familiar product. They're a familiar name.
Did you have a question?
Yeah.
You got your hand up, Matt. What's that?
I forgot.
Okay.
Oh, I'm sorry.
That's okay.
Gotta go like this, because I'm blind in this, I'm in deaf in that.
You mentioned, okay. Okay, go ahead, Merrill.
You said like, you're keeping track of everything from when it's a seed, like all the way to where, till somebody purchases it. Are they using barcode systems or something? I mean, how are they, doing that, like to get it to stuff to stuff to stuff?
So,
And then
yes,
being tracked.
and what that looks like is up to each state. It's all pretty much similar. So when the state, your state regulator for cannabis, they have to, before they can go legal, they have to put all the policies, procedures, and rules behind the bill. So they will always, they have a government track and trace system. Now, some of these government track and trace systems, Metric, MJ Freeway, they're all lacking too. But they use, their states take advantage of those companies having been there, done that, even though their systems are a little antiquated, they slide in because they've been doing it for so long. And so, yes, it's a barcode, certain tags, and they track that, you know, even down to trimming. Nothing can fall on the floor and be swept away and put in the trash. They have to bag that up and tag it.
Danny, you said, you listed off a bunch of states that you think are going to be the strongest sectors, including New York, New Jersey, Maryland. Didn't mention California, or the West Coast states. What's your reason behind that?
California cannabis market is really in trouble right now, and they can thank their state regulators for that. Their state regulators, they started out with 3 separate entities regulating product. And of course, with 3 different regulators, what do you have? Three different sets of rules. And that creates chaos. And in the beginning, they were putting businesses out of business before they ever got to open the door, because part of the requirement to have your license is you have to have a building, you have to be paying rent, you can't be selling anything, you can't have anything in there, it's got to be an empty shell of a building, you have to have a bank account with X amount of money in it. So you have to have all these things before you ever even get your license. So if it takes you 2 years to get your license and you're paying salary for a handful of people that don't get to do anything, you're paying rent on a building you can't even use, where does that money come from? That money comes from investors, not from the bank, not from anywhere. So when that well dries up, they're out of business. And where did it go? Oh, the investors own it now, before you ever even got your license.
Maybe that's Rob Seacrest's mom. I don't know.
He just real estate funds.
That's right.
Are there any other questions?
Anybody want to go into banking now? You see a future?
Payments is where it's at.
What about lending? We only got a couple more minutes, but do you have any comments about lending? Is that becoming more doable for banks to get into lending?
Banks are afraid to touch lending in cannabis because of too many variables resulting from the federal illegality of it all. These businesses, believe it or not, they can't file bankruptcy. And if you work there, you can't file bankruptcy because your income is considered derived from a federally illegal business. So the U.S. Bankruptcy Court doesn't acknowledge it, but banks haven't figured out the risk versus the reward yet. And so they're very optimistic and don't really want to get into it. So some of them dip their toe into it. It's just, and a lot of these banks that are in the industry, like I said, they're the smaller state chartered credit unions and they're the smaller state chartered community banks. And what do? They know how to give you a home mortgage. They know how to give you a home equity loan. They know how to give you a car loan. But they don't know how to give you a commercial loan. They don't know how to figure out the worth or the value. And oh, by the way, there's layers upon layers upon layers of ownership. and they can't maneuver through that. So lending is very difficult, and there's, geez, dozens and dozens of people in this industry trying to figure it out. But it's very expensive too.
All right. Cover all the bases. Anybody? Questions?
I hope it was intuitive for you. I hope you learned one thing at least.
No, it's a part of the deal, and it's kind of,
Well, it's a very unique industry for sure.
22 new farms are enter the industry next year. Will they utilize the same banks that are in the business now, or you think some more banks are going to get some?
More and more banks, you know, when I came to Florida, you know, everybody was already, all the licensees that had operations were already banked. And they were banked by the credit union that I came from in Colorado. They didn't like it when I took all the customers. But more and more banks are entering the industry, and it just depends on how innovative they are, how quick they are. And a lot of times it boils down to customer service. Because the fees, you know, the process is always onerous.
All right. That's it. Have a great day.
Thank you.